Here we go. We're back. John Marshall, Suncoast NPI. Another week gone, and this NPI TV is blowing up. People are coming in all over the place, asking about hashtag free meals, coming in the chapters, checking this thing out. People want to sign up for NPI just so they can be a part of the TV show, and I don't blame them because this is cutting edge. Didier and they're just talking about this off camera about how nobody else is doing this, and but this is all about our members. And this is the reason I do anything as the owner of this organization, is to bring more value to our members. And our members are full of rock stars in the categories. We're a seat-specific referral networking organization. So our members are rock stars in the category. That's you, sir. People that have servant's heart. Yeah. Definitely you, and people that are committed to the commitment to make these chapters thrive. So this is all about you, Mr. Didier, and this is your time to shine. I know you get all in the chapter in between those four walls, but you get to talk to this audience out here. And who is this guy, Didier? Who is Didier?
Well, my name is Didier, and I do mortgages. And the name of the company is called Didier Mortgage, and I've been in business for 33 years.
Yeah, that's a long time.
Yes, sir.
That's a long time. All right, so Didier, let's just go right into this. Tell me the difference between a mortgage broker and a banker.
Well, a mortgage broker has many different sources of financing to get, where maybe a bank is limited on certain products. As a broker, we can do such thing as bank statement loans. We can do no-doc loans. We can maybe do a VA construction perm loan, a VA home improvement loan. So those are a lot of things where maybe the banks are specific on only certain things that they can do. And we can do it all. And we have access to all of it. Being a broker, we have access to all these different sources of financing.
That's awesome, Didier. So then let's go into that area itself. Yeah. What differentiates you from the competition?
Well, I have to tell you, I'm a structurer and I create. So what I do is I really look at a deal to see how it's going to best work. I find out, first of all, from the customer, if they're paying rent, what is their rent payment? And do you want it to be the same as your mortgage payment? That lets us know exactly what the purchase price of the home is going to be.
Gotcha.
I find out what their credit is. Sometimes they need structuring. They need work. And that's what I really drive to do, is find out what their needs are to get them in that home, and really try to get them in that direction.
That's great, Didier. So, so a lot of people may or may not know this. So just take a little bit of time and walk us through the actual process of getting a loan.
Oh, process of getting a loan.
Yes, please.
It's really technology. So what we do is when we take a loan, I pre-qualify you. There's three major components. One is going to be your credit. Two, how much money do you have? And three, what is your income? And from that, we figure out what and how to structure your loan and what is going to be best for you. So when we're done pre-qualifying, I really don't like to pull credit up front. And the reason I don't is you don't want everyone pulling your credit, because that's a hit against you. You have Credit Karma, you have your credit cards, you can get an idea. Is it accurate? No, but it gives you a range of where your credit's going to be. And that's really a good start. And then we can go from there. But once you're looking for houses, yeah, absolutely, we want to pull your credit. Once you've committed to say, you know what, I'm going to go with you, Didier, because you really don't want a million people. Technology-wise, we take a loan application over the phone. We get all the information inputted. When it comes time to sending you the package, it's done electronically.
That's awesome.
We go through the package from beginning to end, and then I quiz you on the package. You electronically sign it, and then you have a choice. You can take your documents.
Right.
You can either scan and email them to a secure site, because we never take anything unsecured, or I'll come up and pick it up and give a hug and see you and take it to the closing, and to the processors rather. And then I come to your closing and we work that system.
Yeah,
and that's how it works.
That's awesome. I mean, that spells it all out.
It does.
And you're amazing. So let's talk some products. What products do you have that others may not?
Well, you know, we all have the same products of a conventional loan, which, by the way, is Fannie and Freddie. You know, that's where you put your 3 or 5% down or more, FHA and VA. But things I do have that maybe some people don't have, like we're talking about the banks. We have a no-doc loan.
Wow.
On an investment property, investment only, you can do a no-doc loan where there's no job, there's no income, there's no assets. But it has to be a certain loan-to-value, a certain credit score. I have a 203K. I have a renovation loan. I also have a VA home improvement loan. People wanting to go get a VA loan, and all of a sudden they think the house has to be picture perfect. It doesn't. We can roll in certain costs to improve that loan to make it VA eligible.
Wow.
We have that ability. We have what they call a bank statement loan. We have construction perm loans.
Wow.
But let's go to that bank statement loan. How many people are going self-employed or 1099? They write off so many expenses, they can't show their tax returns. Well, you can do a bank statement loan, business or personal. Personal is 100% of it. A business is 50% of the average of 12 months. Opportunity to buy a home that you may not have known had you gone the normal route.
Wow. Wow. So you bring a lot of value to the table. And me just sitting here, it sounds like you'd probably be pretty expensive, right? So, but are you more expensive than going to a bank?
Absolutely not. I get paid by the lender, and people need to understand that we get paid by the lender. Now, can a bank or a broker charge above and beyond? The answer is yes. But my origination is always met by the lender compensation, which washes out to zero, and there are no extra costs. When you are comparing good faith estimates, everybody may have a doc prep or a processing fee. So those are the differentiators, but really that is it. I don't get any of that. My fee really comes from the lender. They pay me to deliver them the loan.
That's awesome, Didier. So you have a wealth of knowledge behind it. So you didn't start this thing yesterday. So how long have you been in this business, Didier?
I've been doing this for 33 years. I've closed over $1 billion of residential loans. Take the average loan size 200, and you get the number.
Wow, it's a big number.
Yeah.
So 33 years. So what have you seen you've seen a lot of things change. What have you seen that actually, in your opinion, is a game changer?
Technology. You have to stay with technology. Unbelievable. I was in Wild World of Sports the other weekend, and I was at the hotel room for my daughter's soccer. I was able to take the loan applications, 2 purchases right then and there in my hotel room, and got the loans all done, executed, signed, and everyone got to move on with their day. Unbelievable technology.
Awesome.
Not only that, but you're finding out that we're able to speed the closings up. We can actually get a loan done in 12, 14 days from start to end. That's how quickly it goes. Not only that, but technology is creating where if you're putting 20% down on a conventional loan, you can get that appraisal waived. Meaning you could not have an appraisal, it could say waived because of the database, the information that's put in through the lenders of Fannie and Freddie Mac, or the government rather, that's in the system, it can say that. Now they're also doing it where it's only $145 where some field inspector goes out to look at it. And if it says a full appraisal, it's another $145. That's $290 versus the $465 to $500.
Gotcha. Costs
are coming down. It's streamlined, and the finish line is a lot sooner than it was before. A VA loan, people think 45 days. Well, I've got them done in 20 days, 15 days. FHA, think are 45 days. Not. It could be 15 days. Really, the speed and technology, if you have the right team in place, can execute that loan relatively quickly.
Yeah, that's awesome.
Yeah.
So Wild World of Sports, Chargers, shout out. Did they win the tournament?
They won the tournament.
I know, right?
15U Clearwater Chargers. Very proud.
I love it. Yeah, you should be. So I got to know, I've known you for quite a few years now, Didier. You could actually do anything you put your mind to it. I'm 1,000% convinced of that. So how did you get into this business?
Well, that's a great question. I was 26 years old, and my mother, she said, Didier, by the way, I was a financial analyst. I was at Citibank. And she goes, why don't you get your mortgage broker's license? And I said, Mom, why would I do that? She goes, I have a feeling. I said, Mom, I'm educated. I got a 4-year degree. I'm in accounting. I'm doing great. She goes, get your mortgage broker's license. Well, I've been doing it since I was 26, and I'm 57.
Wow, that's awesome. Always listen to Mom.
Mom knew.
Mom always knows.
Yep.
Yep, I have one of those too.
Right.
So that's great. Thanks for sharing that, Didier. So what do you think? So 33 years in.
Yep.
Yeah, and we got about 2 or 3 more minutes to go here.
Yeah.
So in the future, what do you see down the road? What do you see from the loan perspective that you see down the road?
Actually, I see some changes taking place. You always have your Fannie Freddie and your FHA VA, but I think a lot of people are going self-employed, whether voluntary or through the use or the force of their company. And I see a lot of changes going on. So you're going to see a lot more 1099. You're going to see a lot more self-employed people. You know, when I was mentioning those bank statement loans or those no-doc loans and things of that nature, well, really for a primary residence, the bank statement loan, it's 2 years of being self-employed.
Wow.
And they'll go off the last 12 months because really, if you're a realtor or you're in sales or you're 1099, you're able legally to do so many write-offs and it may limit the price of home that you want. But now, through the bank statement loans and new venues coming up, and you're going to see them getting creative, but it's not going to be creative towards a primary residence, an owner-occupied home. You're not going to see a no-doc because they can't do it. But you're going to see like the bank statement loans, and you're going to see a lot more flexibility to help that homeowner get into a home. And I see more opportunity happening in that direction. I think that, you know, other things, if you had hardship happening, you've had a bankruptcy, you've had a short sale, a foreclosure, you know, things happen. People go through changes. You know, when you do the normal conventional right, you have so many years you have to wait. But through alternate means of these securities that we have, it's a lot less time. You don't have to wait 7 years on a foreclosure for a conventional, you know, et cetera, et cetera. You have the opportunity to get back into a home much sooner. And I do see that happening. I see that paper increasing and growing.
Gotcha. No, thanks for sharing that wisdom. We have a minute to wrap. If you don't mind, can we segue over to Suncoast NPI and just tell us a little bit? You've been a member for a long time.
Well, John doesn't know because he wasn't around then. But I was a member starting in 1995. And I really believe in network professionals. And I'll tell you why, John.
Please.
You know, you're not paying me to do this, are you?
No, I'm not.
Right. What you have to have at a network professional group in order to grow your business, and really what you need is to be in there because you get referrals and they refer you business. But I'm going to tell you, that's just a part of it. You know, like most of the people are in and out of my home because they do so many services for us. I mean, I have to tell you, from the pool guy to the landscaper to everybody, it's just a relationship that you have. And when you have that coming to your home, you refer it out. And I can't tell you the referrals that I give out to the insurance person. If you're not in a network professional group, in fact, I got to be honest. I'm always honest. I'm getting you a guy today. I'm having lunch with him today. Yeah, I'm having lunch with him today. And it's an insurance agent. So I'm sitting down with him at 1 o'clock for lunch, and he'll be giving you a call.
Perfect.
So I'm keying him up because he'll grow his business. And that's the thing. I'm going to tell that insurance business that he's going to grow his business by 30%. Easy to do in one group. Did you hear what I said? He'll grow it 30% in that networking group.
Didier. He is amazing. I hate to cut him off. We're over time, but we're going to have him back. Thank you.
Thank you.